There's a famous saying in markets: trust takes years to build, seconds to break, and forever to repair. Now think about this: India's most trusted private bank, a stock that millions of investors rely on, suddenly falls sharply. And not because of the profits, not because of the growth, but because of one resignation. Yes. So the real question is, what did the market see that most of us did not? Because in the stock market, prices do not fall when news comes out. They fall when confidence goes out. Now let's start with what has actually happened. So the entire fall started after the sudden resignation of its chairman Atanu Chakraborty. Now resignations are normal, people retire and they move on. But this one was different. He stepped down citing quote unquote differences in values and ethics. And in banking, that sentence is not small. That sentence is everything. There is another saying: where there is smoke, there is fire. Now, whether there is actually a fire or not, the market does not wait to find out. It reacts to the smoke. Now, understand this clearly. A bank does not sell products, a bank sells trust. So, when you invest in a bank, you are not buying numbers, you are buying governance, leadership, credibility. So, when a senior leader exits with an ethics related statement, the market does not ask questions, it assumes risk. Now, let me simplify this for you. Bad news creates fear, and unclear news creates panic. And this was unclear news. Now, after the resignation, a bigger question started building in the market. Is everything really fine inside the bank? Even though there were clarifications from SEBI that there are no regulatory issues or challenges, the doubt was already planted. And in investing, doubt spreads faster than facts. Markets move on perception, not perfection. Now, reports also suggested something big. There could be differences between management and the board. And this is where things get serious. Because when leadership is not aligned, it creates uncertainty around decisions, strategy, and future direction. And investors hate one thing the most: uncertainty. Now, here's where things got worse. Because in markets, bad news never come alone. After all this, more concerns started surfacing, and there were reports about issues like mis-selling of financial products, internal control questions. Now, individually, these may not seem huge, but together they create a negative narrative. It is like this: if you see a one crack in the wall, you are like, okay, that's manageable. But when you see multiple cracks, you start questioning the entire structure. Now, zoom out a bit. This is not happening in isolation. This is happening after the massive HDFC merger. And that merger has made the bank bigger, more complex, harder to manage. So investors were already watching closely growth, margins, executions, and now this event adds uncertainty of top of complexity. Big ships don't sink easily, but they turn slowly. And right now, investors are questioning the direction of the ship. Now, let's come to the truth. Did the business collapse? No. Did its profit disappear? No. Did fundamentals change overnight? No. Then why did the stock fall? Because markets are not driven by logic alone, they are driven by confidence. And right now, confidence has taken a hit. Smart investors do not react to noise. They ask, is this a temporary sentiment issue or a permanent business problem? Because there is a big difference. One creates opportunity, the other creates risk. In the short term, the market is emotional. In the long term, it becomes rational. So now that we understand why the stock has fallen, the real question is, what do the numbers actually say? Because in investing, price is what you pay, but value is what you get. Let's start with the current valuation. Right now, HDFC's market cap has just over 12 lakh crores and the stock is trading at around 780 rupees. Now, here's where things get interesting. The current price to earning, that is stock PE, which is around 16. But if you compare this historically and see the last 5 years PE, it is around 20. And if you see last 10 years PE, it is around 23. So what does that mean? The stock is trading below its historical valuation levels. In fact, it is trading close to some of its cheapest levels in years. Let me say this clearly. This stock is cheaper than its own history. And interestingly, it wasn't even this cheap during COVID. If you see, the median PE around COVID was 16.9 and its current PE is 16.1. Now, one important thing here, when you analyze banks, you do not focus on ROCE because banks do not deploy capital like normal businesses. Their core business is capital. So instead, we should look at the return on equity. And here the ROE is around 14.4%, which is decent and stable for a large bank like this. Now let's look at the actual performance. If you see the latest quarterly result, revenue is an all-time high of 87,000 crores rupees. Net profit, it is also at all-time high of 20,691 crores. So despite all the noise, the business is still delivering record numbers. Now zoom out further. If you look at the yearly performance, revenue has started around 3.48 lakh crores rupees and net profit is over 77,000 crore rupees. Both are the highest in the company's history. So just think about this for a second. The stock is falling, but the business is growing. And that's a very interesting contradiction. Now let's talk about the balance sheet. If we go down, balance sheet is everything. And here's things look stable. The reserves are strong, the structure is solid, and there are no obvious red flags in the numbers. Now, one more important insight. This is not a retail driven stock. If you see, this is an institutional stock. FIAs hold around 47 to 48%, DII hold around 37%, and public holding is just around 15%. What does this tell us? Big money is involved here. And when institutions react, the stocks move sharply. Retail investors follow the price, but institutions move price. So now let's connect everything. On one side, we have record revenue, record profits, strong balance sheet, and lower than historical valuation. But on the other side, stock down significantly, sentiments are weak, uncertainty around leadership. This is where market tests your conviction. So now the final price of the puzzle is what is the market actually doing on the charts? Because price action tells you how investors are reacting, where support lies, and what could happen next. Now let's look at the chart. So now that we have seen the numbers, the final piece of the puzzle is what is the market actually telling us through price? Because at the end of the day, price is where all opinions meet. Now, if you look at the chart here, HDFC Bank has corrected significantly from its recent high. The stock made its peak around November 25, and from here it is down more than 23%. Now, here's thing even more interesting. At current levels, the stock is almost trading at the same price where it was in the month of February 2021. Let that sink in. For almost 4 to 5 years, the stock has gone nowhere. Now, this tells us something important. Even though the business has grown, the stock has been in time-wise correction. This is what we call price correcting through time, not just value. Now, let's bring in a simple technical indicator. This lines here is a 300-day moving average. And currently the stock is trading below its 300-day moving average. Now for many investors that might look negative, but here is where things get interesting. History does not repeat exactly, but it often rhymes. If you look at the past data, this is not the first time it has happened. In June 22, if you see this time, the stock went below its 300-day moving average. And after that, it saw a huge up move. Again, around early 2024, the stock dipped below the average and then it recovered and made the new high. And now we are seeing a similar setup again. So, what does this mean? It tells us that this stock has a pattern of correcting, then consolidating, and then eventually moving up again. But, and this is important, patterns do not guarantee outcomes. And just to be very clear here, this is not a prediction or an investment advice. This is simply an observation of how the stock has behaved historically. Markets can always behave differently, so it is important to do your own research or consult a financial advisor before making any decisions. So right now, technically, we are at an interesting point. On one side, the stock is below its long-term average, sentiment is weak, and on the other side, historically similar levels have led to recoveries. This is where the market tests your patience and not your intelligence. So now the real question is this just another phase of consolidation or is something fundamentally changing? That is something only time will tell. If you found this analysis helpful, make sure to like the video and subscribe to the channel for more such insights. It really helps the channel grow, and I'll see you in the next one. Thank you for watching.